Hey guys, what is going on? Welcome back to the channel. Again, I want to thank everyone out there for all of your support on the channel. All the viewers, all the subscribers, immensely appreciate the support. Today, I just quickly want to jump into the portfolio to answer a few questions that have been on my most recent videos, including when is the next dividend for Ford, a very popular topic, and Ford actually announced the dividend today, declared a dividend, so we'll kind of go through all the important numbers for the next dividend with Ford. And also, a very good way of remembering all of the different types of options trades. I quickly want to review the options trades I've made so far, and then go through a mnemonic that I use to kind of remember what you're doing with each of the different types of trades. There's a number of different combos with buying and selling, calls and puts. So we'll kind of go through that and the method I use to remember very quickly and to ensure that I'm doing the correct trade with all of the options trading. So let's first start off with talking about the portfolio here, reviewing. Very good day today, as you can see up top here, up 1.28%. Did come down a bit here right before the close of trading, but still end of the day with a very nice return, 1894.24, a little bit extra in after hours trading there as well, 43.21, 0.03% and 1.28% of the overall portfolio. A lot of this has to do with easing of tensions between the U.S. and China with regards to the potential trade war that was looming over the last couple of weeks. So hopefully there's a lot of investor enthusiasm the rest of the week and the market continues to rebound here. Let's quickly go down to Ford to start off the video today. So Ford has an upcoming ex-dividend date. It will be next Thursday on the 19th of April. So just to remind you guys, you have to buy this stock before that point. Essentially buy it on the 18th or before. Be the holders of the stock on the start of the ex-dividend date, the 19th of April. If you do that, you can go ahead and sell off thereafter on the next dividend date or anytime really within the next week, 2 weeks, whenever that may be, and you'll still qualify for the dividend. The dividend payment will be on the 1st of June. It will be 15 cents per share for a dividend yield right around 5.4%. So I'm going to be holding through that point, as well as maybe adding to my position if there is a dip in the price of Ford. As you can see here, it's been on a pretty good run here over the past week, 5.43% in the green. Over the last 1 month, 7.2%. But you can see here it is still down over the last 3 months, 11.11%. And you can really see this kind of peak up here, getting up almost to 13.10, I believe, at one point before really pulling back here. I went ahead and jumped in, bought some shares in my E-Trade account. Very happy with the return so far with the special dividend and the regular dividend, that last dividend payment. And then now, again, another 15-cent dividend with the 19th of April, the ex-dividend date, payment the 1st of June for a 5.4% dividend payment. So now let's go up to options trading here. Just want to go over all the options trades I've done here. You can see options, I've made a number of trades. These are all trades that I've sold off. So I've sold some calls and I sold some puts. Let's just go through these very quickly here. And you'll kind of see the power behind options trading, the rate of return that I'm getting with some of these trades. Again, as I discussed in my prior videos, I'm only doing some very low value trades here, not really jumping into a lot of these trades with a lot of capital, just trying to learn a little bit more about trading options, doing a lot of reading, a lot of different resources. There's a lot of sophisticated ways of trading options. Decided just to jump into a few here to kind of test out the platform. You can see that the rate of return is quite remarkable here, just on these very simple trades. You can see this one with Pfizer here. I sold off a put here. Basically means that I am obligated to buy this stock at $33.50 if it gets down to that point. You can see here just on the options trade, and again, I can go ahead and buy this one back for $2. They basically gave me $6 to make this trade, so I'd make $4 on the trade, and you can see it's up 75% so far. Again, these are lower value trades, not a lot of capital, not a lot of shares that I'm risking on these trades. But you can see here, 75% return. That is the power of options trading. Another one here, I sold off a put for GE, basically meaning I have to buy this stock if it gets to $12.50. You can see here, I'm up 44% for this trade. Another Pfizer trade. This one I sold a call. Basically means I have to sell this stock to another investor for $37 if the stock gets up to that price. You can see it's down 33%, but if you take a look at the trade itself, basically I got paid $3. It's currently $4 to buy back that trade, so I'd lose $1 if I went ahead and did that. So you can see really you can make a lot of money, but you can also lose a lot of money very, very quickly here. So 2 trades with very good returns. This one, not so great, 33.33% in the red. Next one here, IRM. Again, I sold off a call, meaning I have to sell this to another investor if the stock does get up to 35. You can see the rate of return there, 68% on the options contract. Portola went ahead and sold off a call for this one as well. Again, I'm obligated to sell this to another investor for $35 if it gets up to that point. 12.31% in the negative. But again, I'm getting a credit for all of these trades as well. So let's kind of go back. Don't think I emphasized that here. So I got $8 for this trade. Got $9 for this trade. Again, each contract's 100 shares. So that 3 cents, you basically times that by 100. $3 for this trade. For IRM here, I have a trade of $25. Portola here, $65. And the last one here, I sold off a put, meaning I have to buy for it at $9.87 if it gets down to that point. And for this one, I got paid $43. So you can see there, a nice return with the credits for the contracts, but also I can go ahead and trade those contracts off as well. 39.53% in the green with this one, 12.31 in the red for Portola, up 68%, down 33%, up 44%, and up 75%. So again, the power of options trading, you can make quite a big return by not really investing a lot of capital or putting a lot of shares on the line. So let's go into the way I use of remembering what we're doing with all of these trades. So if we go to trade, we go to options. You can see here there are 4 different things you can do. You can buy a call by basically doing this. You can buy a put. You can also go ahead and sell off a call and then go ahead and sell a put as well. So 4 different combinations. And the way I think of this is at any time you do a buy order, it's basically meaning that you have the opportunity to either sell a share or buy a share at a particular price. So the way I think about this is if you buy a contract, there's an opportunity to do a particular trade. If you sell a contract, you're obligated to do that. There's no picking and choosing. You have to do whatever trade you do. So if you buy something, you have the opportunity but not the obligation. The way I remember this is call kind of equals sell. If you take a look at those 2 L's with call, 2 L's with sell. So a call is sell. So when you buy a call, you're basically buying an opportunity to sell a stock off at a particular price. If you buy a put, I think of put as buy, both with you in the middle there, put or buy. So when you buy a put, you're basically having the opportunity to buy a stock at a particular price. So if you buy a call, you have the opportunity but not the obligation to buy a stock at a particular price. If you buy a put, you have the opportunity but not the obligation to buy a stock at a particular price. And with a buy order, you have to pay for that opportunity. So you have to pay another investor for that opportunity. Again, it's not an obligation, it's an opportunity, but you pay for that. If you do a sell order, for example, you are obligated to do whatever the trade is. So if you sell a call, you're obligated to sell a stock at a certain price. If you sell a put, you're obligated to buy a stock at a certain price. There's no picking or choosing which orders to execute. You have to do that if the other investor wants you to do that. But when you sell off a call or a put, the investor pays you. So if you sell, you get paid. If you buy, you have to pay for that. And then again, if you do a call order, call is like sell. You're obligated to sell off a stock at a particular price if it's a sell call. If it's a buy call, you have the opportunity but not the obligation to sell off a stock at a particular price, and you basically have to pay for that particular contract. And vice versa, if you sell a put, you are obligated to buy a stock at a particular price, and you get rewarded for that. You get paid money for making that contract. If you buy a put at a particular contract price, but you are not obligated, but you have the opportunity to buy that stock at that price, but you have to pay for that contract. So that's kind of how I think of all of this equals sell, put equals buy. And if you buy either a call or put, you have to pay for that obligation, or excuse me, for that opportunity, but not obligation. But if you sell a stock, you get paid for that, but you're obligated to go ahead and do the trade if the other investor executes that contract. So that's how I think of all the different contracts. Again, I'll be going through more of these contracts. I think it's a lot easier to understand if you do a few simple contracts, buying and selling some of these different types of contracts, options contracts, really solidifies it with regards to my understanding when I do some of these trades, what I'm actually doing on the trade. So again, let me know if you guys are jumping into contracts, if you are jumping into options trading, basically buying and selling contracts, but you can also make some money by selling off contracts and getting rewarded for that. There is some risk involved with that, but again, you can have a pretty good rate of return. And if you are comfortable either buying or selling off a stock at a particular price, there's really not a lot of risk from my perspective. Yes, there's some loss of upside potential and also some downside risk with the different types of contracts. But if you're comfortable buying or selling a stock at a particular price, it's really not a lot of risk from my point of view. But again, I definitely would encourage you guys to do a number of smaller volume, smaller value trades, really understand what you're doing. I'm reading a lot of different resources with regards to options trading. There's a lot of sophisticated ways of trading options, but understand it very well before diving into and trying to make a big return. Risk equals reward on the stock market. So the riskier the trade, yes, you have the opportunity to make more money, but you also have the opportunity to lose a lot more money as well. So again, just quickly wanted to go through the 4 dividend payment as well as some of my options contracts I've done so far, as well as kind of going through that mnemonic that I use when trying to recall or understand or remember what the contracts are with regards to buying and selling puts and contracts, and also what it means for a put and what it means for a call order. So not to make the video too long, I'll kind of end it here. Again, just wanted to go over those topics. If you guys have any other questions about options trading or anything with regard to the stock market, please let me know in the comment threads. I definitely take a look at all of the comments. There have been quite a few comments recently, so I do apologize if I'm not getting back to you guys as quickly as I would hope. But my goal is to get response to every single comment that's on the channel. It might take some time, but I definitely want to get to the point where I respond to every single comment. And again, if there's a question that is quite common in the comment threads, I'll definitely do a video about that moving forward. Again, both of these ideas for this video were because of a lot of people wondering about the 4 dividend, as well as wondering how they can remember what all of the different contracts are with regards to options trading. So again, I don't make the video too long. I'll kind of end it here. If you guys do enjoy the content on the channel, if you guys do enjoy the video series, feel free to like, share, and subscribe. And until next video, we'll see you then.